Welcome to the Well-Off Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Masri. Thanks for tuning in. It's George Masri, and on this episode, I interviewed Cody Yeh, who is a first-generation immigrant from Taiwan. He came to Canada when he was 18 years old, studied to become an engineer in university, got a white-collar job, and he then realized that he wanted to learn more about stocks, about building wealth, and about real estate investing. So he ended up doing that, and on this episode we talked about stock options. So we broke down the basics. We've covered that in the past, so if you want to learn a bit more about the strategy, you can go back about 6 months where I interviewed Omar Khan from Theta Trading. But anyway, we talked about getting a 1 to 4% return per month on your stock options premiums, investing in the S&P 500 and ETFs, the benefits of doing that for people who don't want to spend a lot of time learning about stocks, stock splitting and how you can benefit from that. And then we talked a little bit about his real estate fund and how he's starting to invest in Florida, the cost to build in Florida and the after repair value that he expects. And then the last thing we talked about was his Bowmanville duplex conversion and additional dwelling unit that he's building. So basically it's a bungalow that he's putting into the backyard, which is, according to him, going to be 800 square feet up, 800 square feet down. Very cool, the expected cost to do that and the expected rent. So I hope you guys enjoyed the episode. Make sure to share this with a friend or family member. Give us a like on YouTube, and please subscribe if you'd like to get updates on the newest videos and the newest podcasts. And then finally, if you can leave us a review on the Apple Podcast platform, that would be greatly appreciated. If you want to connect with me, go to my Instagram page, WellOffX. Send me a message. I'd love to hear your feedback. And then last thing, if you're interested in some multi-units, we have some pretty cool opportunities in the Niagara region for 3 to 6 unit buildings. So make sure to reach out for that. Enjoy the episode. All right. I'm here with Cody Yeh, right? That's
Cody
how you say
Yeh.
it. Yeah? Okay.
Cody Yeh.
What's the correct way?
Yay.
Yeah. Okay. Sorry. You got to tell me that.
Say yeah to fire, Cody Yeh.
Yeah. Okay. Sorry about that. That's what I always wondered, because I see your name. I'm thinking it's but it's Yeh. Okay. So Cody, thanks for coming by today. Again, we're doing this in person, which is awesome. I love that. Why don't you tell me a bit about your childhood? Tell me about where you grew up and 1 or 2 things you remember.
Wow. That's way back. Usually the podcasts only go up to, age of 18. So I never really talk about before I came to Canada, right? So I came to Canada at the age of 18. So before that, I was always in Taiwan. I was going through all the typical Asian educational system, as in I was stuffed with cram school growing up.
Okay.
Math, musics, all that stuff that I like or not like. And I was always really interested in sports and cars. So as a kid, I really want to become a Formula One driver.
Okay.
And then, my dad kind of shut me down and say, hey, we don't have the environment. We never see anyone done it in Taiwan, so forget about it. Mm-hmm. I'm like, okay, I'm going to become a basketball player, right? And I hurt my knees really early on. So I was like, when I jump, I can touch the rims when I was like grade 8. And I'm not really tall. I'm an average height. So, but I hurt my knee, so I know that's gone. So, but all those like sports and cars and leadership experience really got me. I was a captain for a lot of school teams, so that really taught me the true leadership, even before leadership was a word to me. Right? How do you manage a team? I was always a lot of time the best player on the team, but how do you make your team better, but not just yourself, right? So that's really where I carry forward, and even until now, having multiple teams, and that's really my childhood. Playing a lot of sports, study a lot, not really happy, but true happiness is all in sports and cars.
Mm-hmm. Okay, awesome. And then what was your journey like coming here? 18 years old, you said that's when you moved to Canada. Tell us a little bit about that.
So I was at the point where, like before, from junior high school to high school, kind of from grade 9 to go into grade 10, we have a huge exam. It's kind of like your bar exam, right? So you go in, take the exam, whatever score you get, you can choose your school accordingly. It's mm-hmm. not like, where do you live, you go to that school. No, it's none of that. So instead of having that university system here, we have the high school system there, right? And university, we got to go through the same thing. So a lot of people, like junior high school, you don't know much. Get the best score, people go to the same school, right? And at university coming along, I remember I was in grade 11, and I have to decide what I need to study for university. But growing up, just getting stuck with everything, I don't really know what I like. I know what I'm good at. I'm good at math. I'm good at English. I thought so. And just good at communication. But I didn't really know what I want to pick as a major. And, since I was a kid, I was going back and forth between Vancouver and Taiwan because my auntie's from Vancouver. I think my parents just didn't have time for me during summer or winter vacation. So they just sent me over to Vancouver. I go to summer school, all that. So I'm at the point where I need to make a major decision, but I don't know how to make it. And at that point, my parents were not in harmony, let's put it that way. Mm-hmm. So they don't really have the extra time to guide me through those, living together and all that stuff. So my auntie's like, you know what, Cody, I think the best for you is to have a whole different system, and I see that in you. Why not you come to Canada? And at that point, I remember my mom was very resilient about that, doesn't want to do that because my brother came to Canada 3 years ahead of me, had a great, went into U of T, did engineering. But then my mom feel like she's going to lose a second son almost, right? So she was very reluctant, but my auntie's like, this is the best for you. So yeah, lo and behold, I remember December 30th, 2009, that's when, just pack it up, fly out, and never look back.
Awesome. You're known for your stock videos. I know you do a lot of stuff about stocks, but tell us a little bit about your investment journey. Like, were you investing before coming to Canada, or is that something you started doing here?
No, so I came to Canada when I was 18. So that's around grade 12. I went to university. Like I said, I really like the cars. And I didn't get to be a Formula One driver, so I became an engineer, thinking that I don't have to write a lot of reports, and I'm good at math. So I went into that, and but I found out that, a lot of things I learned, the system is really good, but I don't really find a way that will truly get me to where I want to be in life, financially or all that. I just teach you a lot of great stuff, but you just become another really good employee, right? So an engineer is great, but during second year I started pivoting into a lot of business stuff. I was sitting in the back of the class of accounting, corporate finance, all that good stuff that a lot of time I couldn't even enroll because engineering has a very packed schedule. So I was sitting at night, sitting in the back, and professor kind of noticed me and noticed that I'm that guy, never really pay for it, but I'm just here to support, answer a question. So that's where I got into the investing side of things. So that's where I get into all these marketing, all these good stuff on the business side. And that's where my passion started building, right? It's like, okay, engineering is good. You get a good job after graduation. But what truly makes you money, what can really change your life is getting your finance aligned, right? So that's when I got into that and started with boring stocks. Right after graduation, play with all these bank stocks, dividend stocks. And then 2015 to 2017, I met my day trading coach through a friend. Again, that coach has no YouTube channel. She had her own fund at that point, and she was managing eight-figure portfolio at a really young age. So I was really amazed by that, right? So I remember I learned it from her, and first 4 months I was just like everyone said, day trading is like most people lose money, and she told me up front, you will lose money for the first 4 months. So I lost money. She's like, good, now you're gonna start making money. So I ended the first year of 66%, second year all that, but it's really painful for me at that point because I had a full-time job. 2015 to 2017 I was about 25, 27, trying to climb the corporate ladder. I was working at Honda, the car company. I was working 400 to 800 hours of overtime every year. So I was draining on both sides, and I was trading the Asian market because of the 12-hour difference. Right, so that's what I was able to do at night. When I go home, I read the news, digest it for 1 to 2 hours. I trade for 1 to 2 hours, and I write the report for 2 to 3 hours for 2 years in a row. So Monday to Friday, I'm either at the event you saw me at, or I'm at home trading, and that's my Monday to Friday night. Okay. And, so I'm pretty drained. I'm surprised I still have a life, right? So that was when I was really hustling hard between stock trading, day trading, and learning about real estate and all that. That's why I kind of come about. And within all that, I was, stumble on options, and I start realizing that, hey, stock option, if you do it right, if you become the casino owner or you become the insurance broker, you can really get paid premium. You have the cash flow, you have the appreciation, just like real estate. And that's where my light bulb goes up and be like, I don't have to work this hard 5-6 hours per day, and this is not sustainable. I can actually just do something on my phone, know what's the worst case, best case scenario, generate cash flow, and just my asset snowball and grow.
Yeah.
That's when I really be like, forget about day trading. Even though it was good, most people couldn't make it. I'm going to start this, right? And that's when, I started taking personal coaching clients and then going to a course. Now we have a mastermind of hundreds of students, most of them real estate investors, and
cool.
Never look back.
Awesome. We've covered options trading in the past on an episode. Probably it was released about 6 months ago. Yeah. So if anyone wants to learn a bit more about that, you can listen to that episode. But just if you want to break it down like on a very simple level, can you just explain what stock options are and the kind of trading that you do?
Yeah. So that question is a really good question. So most of your audience are real estate investors. So I'm going to use real estate investing terms. So imagine you want to buy off-market deals. You kind of need some skills to get it, but you can actually buy off-market stocks anytime on market. And that's how Warren Buffett does it. He basically goes out as an insurance broker, right? He sell a policy, go sell a contract and say, you know what? I'm willing to own that off-market deal, and you got to pay me money because I'm taking on the risk, right? And that's, you're like, so Cody, who's on the other side of the table? Who's so dumb to pay you money and let you own stuff for cheaper?
Yeah.
Right. Just like people buying insurance, right?
Yeah.
If they're afraid something's going to go down, they hedge it, right? They buy the insurance for it. So that's where on the other side.
Yeah.
But we know that we've done our homework, we've done our fundamental analysis, just like real estate. We've done, we go from bottom up, what kind of property, what city, GDP, macro. We've done all those. Same thing on a company. So if we agree to own a company or even own an index like S&P 500, you can do that on the index. So you're basically agreeing to own a blue chip stocks or an index fund at a much cheaper price.
Yeah.
And that cash flow as a premium that they pay you of 1 to 4% per month, it's the cash flow you get up front. Worst case, you own that stock or ETF, and you're thinking that in the long term it's going to go up, right? Short term, there's a lot of fluctuation, but in the long term, because the company is doing better, right? So the stock price will follow, just like real estate, right? When the demand is over supply, when there's more people moving in, fundamentals there.
Yeah. Right. So I guess like I don't want to stick to the basics for too long because we've covered it in the past, but if we want to dive in a little bit into the stock options thing, you mentioned 1 to 4% per month. So can you dive into that a little bit? Like maybe you can just tell us about the strategy to get the 1 to 4%. Is that, let's say if you're looking more for the 4% mark, is that would that be riskier stocks in your opinion, or can you do it still with like very steady, safe stocks?
Yeah, very good question. So the reason why I say 1 to 4%, again, nothing is guaranteed even in real estate, right? So inherently, if the insurance company is insuring a less track record person or a bad record person or just don't have any track record, usually they charge more premium. So same thing now we're on the other side, right? We're like an insurance broker. So when we're receiving premiums, we want to get paid more, and the market will price accordingly for higher risk or higher reward stocks, right? So if you want a lower risk, lower return, just stick closer to the 1%. But if you want higher risk, higher rewards, people can stick to 4, and I hear higher numbers, but I always want to under promise, over deliver. So I would say only say 1 to 4%. And the stocks do matter. And there's something called the volatility in the market, right? It's like when insurance company go out and sell an insurance contract, let's say it's a tornado contract. If outside is sunny, guess what? They can't charge really much. But if there's a tornado outside and they see it, they call the insurance company and say, I want that insurance right now. They can charge you an arm and a leg, right? So it's the same thing. When the market is panicking and uncertainty is really high, like raising interest rate, a recession, a lot of people talk about recession, and this is the time where the market is more volatile, more uncertainty, and as an option seller, as an insurance broker, we kind of get paid a lot more. Right.
So what are some of the fundamental rules that you follow when you are doing options trading? So it sounds like the 1 to 4% rule is one of your fundamentals. You're not going to trade and get a 0.2% return monthly, right? What are some of the other fundamentals that you follow?
The most important fundamental is that we only sell contracts on the stocks or ETF that we want to own for the long term. It's just like when a lot of people, like in real estate, a lot of people when they flip a house, right? The smarter way, again, I'm probably going to offend a lot of people, but the smarter way is that if you flip a house, you have multiple exit strategy. That means if you get caught with the market downturn, you can hold it and rent it out with positive cash flow. But a lot of people doing more luxury stuff, they cannot do that. So the same concept on us is we only want to do flips. We only want to get the cash flow or do the transaction on the company we want to own for the long term. And we know what to do, right? When the market downturn, very resilient. You know, I keep using Apple as an example because Warren Buffett owns the biggest part of his portfolio is Apple. So I keep using Apple, not stock advice. And, you know, that's really the fundamental. First thing is you know the companies, better use the product, and you know how sticky they are. You're happy owning it until the next generation, really.
Yeah. Well, one of the things about doing like these stock options trades is that you have to trade 100 shares minimum, right?
Sounds like you know it.
Yeah, I do. I know a little bit about it. I started doing it maybe 6 months ago, and I took a course before that. So for the people, like, you know, if the stocks are trading at like $300 a share or whatever, so you're talking about a minimum of 30,000, typically US, to do the trade. If somebody doesn't have that kind of money available on their account, what would you suggest doing in that situation?
There's many ways I could do it. There's ways you can, what they call credit spread, but again, I don't want to confuse your people.
Yeah.
But really, if you don't have enough money to own 100 shares of something, in my opinion, you shouldn't be using this strategy. I'm sorry if I offend a lot of people, but I truly think those money can be spent better elsewhere on education or surrounding yourself the right people, increasing your income, increasing your saving rate to get to that point, and not just play around with 10, 30,000. A lot of my students start with 10 to 50,000, but they have a lot more money behind them. They're just trying to see a proof of concept.
Yeah.
But if this is your last $10 to $30,000, I truly think you probably shouldn't start.
Yeah.
Right.
Yeah.
You should have your raining day fund of 6 months. You have your other savings, have your other investment, have your full-time job, and really start from there and focus on increasing all those income, saving rate. Get to that point.
What about that second scenario where somebody's just kind of testing it out? They have the money, but they just want to put 20,000 or 10,000 in and see how it works.
Yeah.
What do you like? Do you suggest going after those like less expensive stocks that kind of still meet your fundamentals? After doing some research and whatnot.
Yeah. So that's a great question. I see where you're going with this. So let's say you only have $20,000. So you say, Cody, can I only sell the option on a stock of $200? Because $200 times 100 is $20,000. Now you can go sell a stock at $300 or $400, but knowing that if you ever have to get a sign or buy those stocks, you are using margin.
Yeah. Right.
And there's always a risk when you're using margin. And to me, I don't think it's worth it. So I never taught that. All my students are not doing it. But some people chose to do it. Again, I just don't think margin's worth it. It's a double-edged sword. Warren Buffett doesn't like it.
Yeah.
So I would just say there's still a lot of stocks that are, at a much cheaper price are still very solid stocks.
Yeah.
Again, not stock advice, but a lot of the FANG Group stocks has recently have stock split. So FANG Group, right?
Okay.
Facebook, Amazon. So specifically, not stock advice, just because I talk about FANG Group. Yeah. Amazon just split it. Now their stock price is about 140, right? And even Tesla is having a 3-to-1 split, right? Really soon. So we'll bring the stock price down to around the $300 range, right? $200-300 range. So again, I think that the market is starting to realize that a lot of new people try to get in. So they try to keep their stock price down so that more people can have access to it, right?
Yeah.
Not just option, even just investing. A lot of people kind of fixate on if the stock price is high, it's expensive stocks, but it really has nothing to do with their evaluation.
Yeah.
The evaluation is really just how many outstanding shares, what's the stock price, right? And then they just time it together. That's their market value for that company.
Yeah. Yeah.
But it's the same pizza. Imagine one pizza, you cut it 8 times, it's still one pizza. You cut it 16 times, it's still one pizza.
Yeah.
But a lot of people kind of fixate on how big of a size of that one
Yeah.
piece of pizza is, right?
Yeah. Now, let's say you are starting to earn that monthly premium. You're getting the 1 to 4% premium. Would you recommend, I mean, I guess it's case by case, but how would you recommend using that to kind of fund your lifestyle? Do you start pulling out that money every month and using it? Like, what's your opinion?
Yeah, so that's a very good question. So I'm glad you asked that question because I didn't know how deep you want to go into it. So really what in my mastermind, I teach about there's kind of like the cash flow strategy, selling options on S&P 500. That's the brand new strategy. Well, I wouldn't say brand new. We've been testing for the last 9 months. We've been doing really well since the market downturn, since the last November. Don't have to pick stocks, said and done, 15-minute. Their expiration day 45 days out and all that stuff on S&P 500.
Yeah.
Make 1 to 3%. We're very happy about it. That's our cash flow strategy. And a selling option strategy, because sometimes you might need to hold stocks for a bit, right? A lot of tech stocks people are holding for a while. So that's our midterm strategy, right? So those money that we make from the cash flow, what we call kind of like the flipping and fast money, we can either fund our selling option kind of short to midterm strategy, or we can use to buy and hold stocks, right? An ETF index fund, or we can use those for the lifestyle. So the lifestyle one's from the cash flow, but selling option, the short to midterm is less consistent because as the market goes up and down, individual stock goes up and down, you might have a different balance market, right? So we have a short-term strategy, a cash flow strategy, and a midterm strategy, and the long-term is the buy and hold, like what we do on our RSP, TFSA, just buy the stocks, cost average in, right? So we have a fast, medium, slow.
The long-term stocks that you own, are you typically getting like high dividend stocks and holding on to those? I guess it depends, right? Like
it really depends.
Everybody's a little bit different, yeah.
It really depends. At the end of the day, we focus on the fundamental. It's great to have some dividend, right? Even, great stocks like Apple, not stock advice, start paying a little bit of dividend. It's just to show people their confidence.
Yep.
But a lot of the higher growth stock will have less dividend, and more of a stable company like bank, Coca-Cola, all that will have a higher dividend. But dividend is not the only criteria you look at. But it's great to have a balanced portfolio too, right? Have a different sector, right?
Now, I guess the way the market's been lately, obviously over the last couple months, there's been a bit of a downturn. If you started getting assigned all these stocks and like your cash is tied up, I guess a lot of people are in a situation where they can't really do any more trades right now. I guess you'd be selling calls at that point potentially, but you don't really want to lose money. So, I mean, most people are probably just in a position where they're waiting it out, right?
Yes. Great question. It sounds like you're actually doing it. Love it. So we didn't never talk about the selling covered call part, right? This strategy could be done in your RSP as well, TFSA, and even just owning stocks, as long as you have 100 shares of the stocks, right? So happened to a lot of people, right? Including some of my stocks I'm holding. Yes, it went down. I want to sell some covered call occasionally when it pop back up. I'm still waiting. And that is the part where you really got to be patient. Because if you look at COVID, if you look at the last crash before COVID, 2018, or the last crash before that, 2015, every time that happened, whoever is like, Cody, I'm going to start getting greedy. You know what? I own a stock at 120, but now the stock is at 100. I'm going to sell a covered call agreeing to rent to own it out at 110. And if they get caught at 110, all the effort they've been putting up front, they're losing it.
Yeah.
But the market could come back up really fast too. So this is time really testing whether you are investing in a good company, have trust in the long term. Are they making money?
Yeah.
Are they consistently making money? Are they going to go to the ground? If they increase the interest rate, do they have cash position to cover all the expense? All that. That's when you will test yourself, right? And a lot of people will realize that, oh my God, I just heard my neighbor talk about that stock, so I don't really own it.
Yeah.
But, lessons was learned in this kind of market. But flip side is a lot of people were new to this. Getting in at this time is much better than 9 months ago for a lot of people.
Yeah.
So now is the time where everyone's kind of, woohoo, this is very uncertain. So this is actually the good time to get in. A lot of hedge fund or even fund manager, they actually establish their fund, or like individuals, they really establish a portfolio riding into the downturn. And when they come up, right, riding into the downturn when they come up is when they spend most of their time doing research, positioning, getting all the credit, getting all their cash, dry powder ready. This is time to work extra hard and learn things, position it, and the next 8 to 10 years, you're really sitting there doing nothing because the appreciation is doing for you.
Yeah.
Whereas most people is actually working really hard when the market is really high. Everyone's having that euphoria. They work extra hard, like do crazy stuff. But those times actually you should take a step back, and now is actually the time to work extra hard. And that goes for real estate as well.
Yeah, for sure. Yeah. I guess in that scenario where you've been assigned those stocks again and the market has come down, like you said, the market can come up very fast, and it could be for like one day. All of a sudden the values of the stocks have increased. I guess one thing you could do in that scenario is like sell your stock outright if you want to get out of that position, right? If you feel like the stock's going to come back down, and you have that one day uptick, instead of doing a covered call, you can just sell outright if you want the cash.
Yeah, the beauty about stocks and stock options is that you have a lot more options, right? So if the stock price come up above the price you were assigned at, above your average price, you can decide. Like a lot of my students like, Cody, I have 300 shares of this stock. Should I sell them all? Should I sell covered call? What should I do? I'm like, why don't you split it up into three? One, you sell a very high up price for a covered call.
Yep.
The other one, you sell at the money covered call. Another 100 shares, you just shake it off. So you're getting the best of everything. You're getting kind of like cost average of everything. So your stress is a lot lower, and you average out everything, right? So you don't have to make all in or nothing decision, right?
Yeah.
So
cool. ETFs. So why do you like ETFs? Again, not stock advice. Just make
it's okay.
very
ETF
clear.
is not stock advice. So there's so many stocks in it.
Anything we're discussing here is not stock advice. We're just talking. But okay, tell us.
Yeah. So ETF it's a basket of stocks. Over the years they started with mutual fund where they charge a really high management fee. ETF is a kind of like a newer, more trending version of things because people want transparency. People want lower management fee. So ETF, a lot of them are having like 0.1 to 0.56 kind of management fee. So that's been a huge difference, a game changer. It's really the same as mutual fund, but now they charge a lot less. So this is more for a lot of people who are more passive. They're like, Cody, I don't want to study like you. I don't have a team like you. I'm not part of your mastermind. I don't have coaches to support, read daily news for us. So I just want to get into, let my money grow it. S&P 500 has really been averaging 8 to 10% for the last 30 years. So I just want to set and done. Right, so that's ETF, or even just put your money in S&P 500, right? Just like what Warren Buffett said, right? And really, like all these cash flow strategy I was talking about is when you want to get more than 8 to 10%. You want to put in a little bit of work, 15 minutes per week after you learn it, or you want to get a better return, more control. You can learn that. But if it's just someone's like, Cody, I'm happy with 8 to 10% because that's how much I'm getting from private lending. Now I want my control back, or I want to diversify. Yeah, just put money in S&P 500. That's really, most ETF try to mimic it, but really at the end of the day, like S&P 500 is beating almost all the ETF.
Yeah. What do you think? So you said something along the lines of 15 hours per week. What do you think?
So 15 minutes, not 15 hours, 15 minutes. Once you learn it.
Per week, you're saying?
Per week.
Oh, okay. Yeah. What do you think that, like for those that are not in the S&P 500, if they're looking at just like purchasing or doing calls and puts on stocks, what do you think they should be doing on a weekly basis? Do you think they should be reading for about 15, 20 minutes a day? Do you think how much time should they commit to learning about companies and whatnot?
I would say because I have a team, I have coaches, I have a team of 8, right? The whole team for a mastermind. So I have the luxury of all the research and all that. But for normal people, have a 9 to 5 jobs, have kids, family, all that, I would say at least read once every quarter on their earning report. And that's when the company will come out, show you what they have done for the last 3 months, compare year over year, and what is your outlook. So from there you can decide, hey, if this is part of the company that you still want to participate in, right, in the long term, right? Yeah. Do you think the products are still good, or do you have consistent quarters of really bad results and they don't even know why? So you can kind of, at least once per quarter, I think that would be best. You don't really have to read it every day, but just that because I have a team and I'm on top of things, I have hundreds of students, so that's why we always stay on top, and I really like it.
Yeah.
But because I have a team, so we really filter news down, filter all the noise, and just evidence-based, right?
Cool. Okay. So that's a little bit about stock options, and obviously, like you said, you offer some coaching, so we'll talk about that a little bit later, but let's talk a little bit about your real estate fund. You were mentioning to me you have something going on. It's still kind of in the early stages, but you're looking at maybe going into Florida, into short-term rentals, so tell us a little bit about that.
Yeah, that's our, so there's only a few priorities this year, and the real estate fund is definitely the top priority for my team and my business partner, because our business partner and myself have a lot of success in residential, small multis, and even big multis and some development stuff. And we have been exploring outside of Canada to go into US, and we found out that US is a true capitalism place where they treat the investor with open arms, as in easier to get finance, better numbers. Accounting wise, there's a 1031 exchange, you've probably heard about it. And just the corporate structure wise, you can save our investor a lot more money in terms of tax in US, right? If they decide not to move all those back to Canada, whatever, we have the whole thing going in progress. But what we talk about, we're only still in the legal process. So under the testing water law, I could kind of chat about it. We're not raising money or anything, really just chatting about our experience. Is that we have seen, like for example, the numbers in Florida, we can buy land for $150,000. We can spend about $300,000 to build it, and then the ARV is $1.2 million.
Wow. Yeah.
So I don't know what I'm missing, but I'm really doing all my due diligence inside out, and I haven't found anything. And we're currently putting our money in, and really it takes about 1 year to build. After 1 year, we're going to go back and refinance. We're going to get all our money back in a fat check, and we're going to Airbnb a short-term rental, because a lot of people knows that Florida, Texas, Arizona has been one of the big population migration location, right? So because your political stance, more freedom, they don't really shut down during COVID. So that's where people want to go, more transparency, more freedom. And we're just riding that wave up, and we still see the number works really well. And we have the local team, developer, accountant, power team, property management on the ground. So yeah.
Are you so with something like that, would you be getting financing in Canada for that project, or like are you getting financing in the States, private financing? What are you thinking?
So there's a lot of options. Yeah. From Canada side, TD, BMO, RBC will do US lending. Again, they're totally different arm, same name, but totally separate. They will do it using your Canadian income or net worth. But because we're going through the fund route, we're really just using local financing company. And that's where I say is really very welcome, open arms to Canadian, because you come in, first 5 deals, we're going to lend you less. Once you have a track record, as long as the market and the number works, they don't even blink. They'll be like, Cody, do you want more money?
Yeah.
Do you want more money? Like, we can give you more money. I'm like, hold up. It's like it's crazy amount. Like, once you show them you can do something, they'll give you 10 times leverage of your money. Like, if you have 1 million, they'll give you 10 million, right? So
cool.
In Canada, the only thing I know is you have to have 100 million in your fund, and they'll give you 1 billion. But down there is a lot more welcoming because they're down for business, right?
Yeah. Okay. Now, what about like your other real estate stuff? What's been your strategy here in Canada? I know you own some real estate. Tell us a little bit about that.
Yeah. So I started my first property. I bought it from my mom in Toronto. It was a bungalow right on the Eglinton and Dufferin. That's where the new LRT is happening. So we bought that in 2016, $500,000. I think my mom was really happy, like text me every day. He's like, Cody, we're getting offered for 1.8 million. I'm like, don't sell it. Don't sell it because you don't really need it. And then that's the first one. The second one I bought, the first house in Alliston, second house in Alliston. That's where I thought I would live in there if I stay there for for the rest of my life. Plan didn't turn out that way. And then we do more legal duplex in 2019 in Barrie. At that time, the numbers still make sense. Bought it for around 400, right? And refi money out, and now it's about 800 to a million. At one point, I think it's probably 1 million, whatever. I'm just keeping it for cash flow. And then the newest one we're doing in terms of personal portfolio is we bought a big lot in Bowmanville, and we're building. I believe I'm the first one to build additional dwelling unit. It's a lot by 53 by 220. And up front, the bungalow will turn to a typical legal duplex. I'm sure I don't need to explain that. But because it's so big, right, we can kind of cut the lot in half. We're not severing. But the driveway, we're pushing the garage down. We're making the whole parking lot in the middle of the house. So the front house, legal duplex, has its own backyard. And then there's a 4 to 5 horizontal parking spot. And we're building a whole bungalow in the back. And it has its own backyard and all the amenities. And either we're going to move in or we're going to Airbnb it out, and we get some really good property management team for that.
So tell us a little bit about where you're at right now with that ADU, additional dwelling unit.
Yeah, we got our permit July 18. So I believe I'm the first one to get that permit. So the city is still scratching their head. We're talking about all the surfacing. We're going through the surfacing. It's like, so we need to hook up our natural gas, water, and, what's the third one? Water, sewer, natural gas, electrical.
Yeah.
So, we're going through that phase, and I already have contractor in the finalized stage. I'm, doing all my due diligence and negotiation, tendering, making sure things line up. And I really want to break ground beginning of September to really get the house and the window in before the winter, so they can start working on it in the winter. And the servicing will probably come next year because government is really taking their time, and we're probably gonna have a full house looking nice, but we have no servicing. That's the fortunate part.
What's the timeline been like? So you said July 18th you got your permit. When did you apply for that? Like what was the whole timeline like?
So we put an offer on the house February 14th, so Valentine's Day. Closing March 14th, which started on day one. Even before it closed, we already got all the drawings for legal duplex, but it's really the ADU that has never been done before. So we submitted, I think, around April, and then it took us 3 months to get the permit for ADU. And of course, I'm on top of it, right? Getting the survey done and getting the drawing with the drafter, working through the city, all the local people. So it takes about 3 months. It's faster than I thought, but now the game just started, right? I won a few battles, but now the war just started. It's the true part of building and digging things up. And
no pushback from any of the neighbors. It was all good.
Oh, it's funny because I try to make friends with all my neighbors. First thing I arrive is I knock on their doors, say, hey, I'm the new owner. Here's my phone number. Call me before you call police. And they're like, no, Cody, like this house was owned by, drug cartel. There was squatters in your garage, and that was an ex-OPP right beside my house. He was like, Cody, I see you're doing great things. I'm really happy. Let me know how I can help. Neighbor across, happy about it. Talking about ex-landlord and a tenant. So I try to make friends and let them know exactly what I'm doing. And just letting you know that we might be disturbing during the construction time, but I promise afterwards it will look a lot better. Here's my number. I'm trying to buy any of your neighbor houses they want to sell. Give me a call. I'll pay a referral fee. So
that's awesome. I think that's so important. Like I did the same thing. I did a big renovation recently on a 5-plex. The neighbors, like they were so unhappy with the way the property was before because the tenants were bad. Cops were being called. There was all sorts of problems. The place looked like a disaster. I came in there and started doing all these renovations. So they were happy for the most part, And I think as long as you're nice to them and you let them know, like, hey, if there's any problems, just let me know. And that goes a long way for sure.
I always give them my personal number. I really, truly want to know what they think about and, if anything. Because, like, the fun story sharing, it's the second day after we own the property, neighbor called police on us. my contractor called me. He's like, Cody, just so you know, first day on the job site, police came. I'm like, what happened? He's like, oh, we have 6 jackhammer in the basement digging out some slats. So the neighbor called, but we're all good. You know, we're all local. Police
like a
came.
Noise complaint?
Yeah, noise complaint.
Yeah.
Right. So, you know, it's all good. So we already experienced that first day. And the police, oh, you're local people. Okay, you're doing this. You have permit? Okay, cool.
Yeah.
I'm out of here. So just make sure you work between the hours of operation.
Yeah, for sure. What do you think your cost is going to be? Like, I know you've got a budget for the ADU and whatnot, just for that particular the dwelling unit.
Yeah.
What is it? Additional dwelling?
Additional dwelling.
Yeah, sorry, I forget the terms.
Yeah.
Yeah. What do you think it's going to cost?
Do you want to take a guess?
$250.
So, okay, let's put things into perspective here. So a lot of time when people think about ADU, they think about garden suite. They think about a small house in the back of an existing house in Toronto, right? That 800 square feet. So the great thing about Bowmanville right now is it's brand new. And it happened in Barrie, when I was trying to turn out legal duplex into a triplex. What happened there is that for the first 6 months, the city was that we need more, we need more housing. We're going to support this. Great. When people start putting ADU in the back of their house where they only have like 10 feet apart from each other and all the neighbors right around them, they start complaining. So they shut it down after 6 months. So whoever have their permit within those first 3 months, you can build it, but no more.
Right.
Right now in Bowmanville, because our lot is so long, I'm in the middle of no one. Everyone has a big backyard. I have 220. So I'm really not bothering anyone. But we're building a full bungalow, like 850 square feet up, 850 square feet down.
It's huge.
It's a whole bungalow.
Yeah.
So we have 2 bedroom up, 2 bedroom down. Like we already built a back door with a stair going halfway, kind of like a typical bungalow.
Yeah.
In case in the future they change the zoning, which is going to be like boarded up, washer dryer, basement,
crazy.
done.
You'll have a duplex, you'll have 2 duplexes. On
Exactly.
Yeah.
So I'm already getting that ready, but for the meantime, I'm probably going to move in. I don't really need that much space, so maybe I'll just Airbnb it out. There's a huge shortage for like executive or corporate living. There's a hospital within 5-minute walk. So
So you didn't tell us the cost. What do you?
Oh, sorry. Oh, the cost will be about right now. I would say about 400 to 450.
Okay.
With the current thing. Sorry, I was trying to put into perspective because a lot of people that, Cody, what's the cost per square feet?
Yeah.
Well, there's 850 times by 2, 1700. So 400 divided by 1700, 250.
Yeah, that's still reasonable. But yeah, definitely I was thinking like a garden suite, which would be typically a lot smaller. I think it'd be like 400 or 500 square feet usually.
Yeah.
So you've got like a full house,
Full house.
I owned a house in Hamilton that was 400 square feet. It was a 400 square foot bungalow.
Wow.
Yeah, with a basement, but like a low ceiling. So the living space was 400 square feet. So yeah, you have double that.
Yeah, like I was the first one to go through, so we went through all the bylaws and everything, and our roof can go up to like 5.25 meters. So we make it like, should we go 2-story? Maybe not enough, so we went for a bungalow and we dig the basement.
Yeah.
And then the city came back with like, no, Cody, it's not to the roof, it's to the midpoint of your roof. So now we get like 3 more feet. So I asked my drafter, what should we do? He's like, Cody, do you want a high ceiling? I'm like, okay, yeah. So now our main floor is 11 feet, basement's 10 feet.
Nice.
So we're we maximize everything, right? Yeah. We're really happy about that.
Cool. Okay. Well, that's an exciting thing. So Bowmanville, when do you think? So you're saying you're projecting by next year you should be hopefully done if
next
all
year
goes
spring.
Well. Yeah.
Spring. So it's about 12 to 18 months, like the whole process. Let's see if I can get the 12 months, right? I'm really aiming for that, but I will probably be somewhere between 12 to 18 months.
Cool. What are you projecting to get in rent there?
Oh, so I was playing with AirDNA. I know they're always conservative, so we're looking at between 4,000 to probably 6,000
just for the ADU.
Just for the ADU.
Yeah. And
so
then you have your duplex.
So the idea is that legal duplex will carry the entire mortgage. The ADU is really, if we want to move in, we'll move in for free. If not, we Airbnb out, and that's our extra cash flow on top of our stock option and every other business.
Yeah.
And we're gonna make it so nice, not in terms of finishes, but in terms of the whole atmosphere and the amenities in the backyard. We're gonna put, nice gazebo and just a great place, your own backyard to hang out.
Yeah.
Right.
Very cool. Okay. Well, I think we covered some good stuff here. Do you feel like there's anything we missed? Anything final thoughts you want to share?
No, I think we had a great chat, and if there's any other thing, there's things are moving so fast, it's so exciting. So if there's anything else, we can just chat about it maybe in the future.
Is there one tip you want to share with investors right now?
I think most investors who are listening to your podcast is already doing things, and they don't really need another motivation, but really just don't give up. Keep grinding through all the small details. It's like you look at me, I'm smiling all the time, but trust me, all these 80 you process when you're the first one doing it. You definitely have fun, right? You're in the city, they're all contradicting with each other. It's fun, and I'm used to doing that. But really just push it through, know your end goal. You might be some cost overrun and all that, but in the big picture, as long as, it's carrying itself, you're doing the right thing. So keep pushing forward.
Cool. How do people reach you? What's the best way? And tell us a little bit about your coaching.
Okay. So, if people want to listen, I was on 70 podcasts last year alone. Now we have our own podcast called High Income Earners Fire. So it's for a lot of high income earners. If they want to do it themselves on stock option or do it on real estate, take all the knowledge, all the bits and pieces we share, go do it yourself. But for people who want more hands off, then they can chat with us, have a further chat for there. And my co-host is from US, is a female with 2 kids, third coming, and in San Diego. So she brought in the female perspective and also the family side of things and just the female voice, right? And from US. So we have a podcast. You can type in Cody Yeh in the Google or find me on Instagram. Just make sure you're looking at the right profile. I've been told I have 10 profile at the same time. There's only Cody __ YEH. I don't talk about crypto. I don't message people about crypto. Okay. I only talk about real estate and stocks. I only own 1 Bitcoin, really, just for my grandkids. I don't really care about if it goes to the moon or go to zero. I believe the technology, but really it's not for me to get rich quick. Right. So that's all the way. And if really anyone want to send me an email, they love the email. This is the first time I'm giving out. Cody@CodyYeh.com. That's my email.
Okay, cool. Cody, thanks a lot. I appreciate you coming by, sharing all this stuff. And I hope to see you again soon.
Okay, thanks for having me.
Thanks for listening to this episode. Your support is truly appreciated. And if you can share this with a friend or family member that might benefit from the information, remember, our goal is to motivate and inspire others to take action and to build wealth and to become well off. Enjoy the rest of your day.